Hi, everyone. Thanks for joining today. I'm Regan Sonnabend. I am an entrepreneur, real estate investor, and small business owner. Today, I am so excited to have as my guest Michael Mnatsakanian. Welcome, Michael. Thanks for joining.
Thank you, Regan. Thank you for saying it so fluidly, my last name.
Well, I probably suffered, maybe not quite to the degree you do, but from, getting either my first or my last name wrong, which is fine. I'll answer to anything remotely close. But I think I've heard it enough times now because you're doing so many things. It's like I feel like I could say your name over and over in my sleep. So
That's true.
I got it right. So, for those who don't know Michael, or maybe haven't met me before, we met through Owners Club and through the Subtube community. It's been a little over a year now, and over that course of time, you always get to hear what people are doing, what they're up to, how they're helping others in the community. And I have been amazed, Michael. I mean, how honestly, like at every turn and every moment, you are just like knee deep in everything going on and finding different ways to serve people and taking what you're doing on the front end and iterating it and just consistently delivering more value to the owners club community, to the sub 2 community, and in so many different ways. So I mean, congratulations.
Thank you. Yeah, actually, you kind of hit on one of my biggest cheat codes, and I didn't realize this until I reflected back. But one of my biggest reasons for accomplishing a lot of things that I've accomplished is exactly that mentality of, all right, let me learn something, let me do it, and then who else can I show and teach this to? In that process of learning, doing, teaching makes me even better, but then also allows me to then partner and work with more people that are interested in learning, doing those things as well. So it's some of the generous expert, and it's this unintentional thing of that just comes natural to me to try to help other people who are trying to do the same thing. So it's great to hear that it's working. Definitely glad to hear that people are getting the value out of it. So that's cool.
Absolutely. Well, as I think back to, after we first joined Owners Club and I guess the first retreat, which now, I mean, amazing. Like this time next week, we'll all be arriving in Monterey for, the 1 year anniversary of the first retreat, all of that. But, as I think back to like when we were in Scottsdale and even community camp, I remember, seeing a pitch deck that you had put together for your Kalispell property that we all got to visit, and you had a cool meetup there. And I mean, that property was amazing. The layout of it, I don't know what the before looked like. I'm sure it was probably in the pitch deck, but as I was there and everybody was like flowing through the property during the meetup, it was just amazing how well it was laid out for people to have that, room by room rental, but also not feel like there were, these different kind of, shared living rooms and things like that. Now, I know that was not your first one of your properties that you've set up in that way, but walk me through a little bit, like kind of how where that is in your journey of doing that type of investment and kind of what you're iterating from there and where you're going with it now.
Yeah, absolutely. So that one's actually, funny enough, a short-term rental that in the slow seasons we operate as midterm and rent by the room just to maximize income by minimizing vacancies. So when we have a property that is a short-term rental and it's a decent enough size, it makes a lot of sense that in slower season in Kalispell, Montana, you're not going to have a lot of people needing to rent a whole 5 bedroom house necessarily. It happens, but it's a little more spotty. So what we do is we set those properties up to be successful room rentals for people that are transitioning housing, or they're, or like employees that are coming in and out, like I can't even think of the word, but they're coming in and out of areas, transient workers essentially, who are coming for a certain season or whatever, or prepping for a specific job, or construction or medical professionals, things like that. And so that's kind of why that property was laid out the way it was, and why each individual room had its own lock and all that stuff. So that one wasn't actually one of our, we're going to buy this thing, go all in on co-living or rent by the room. It's just a way that, it's part of super investing. It's the way that we take a property and then maximize the returns by leveraging a variety of management strategies to decrease vacancy, increase income. I think about that a lot, which is I I actually talk about this a lot. Like when I talk to a lot of investors and their goal, like asking about goals, I've talked to hundreds, if not 1,000 plus investors at this point. A lot of people just say things that they hear, like, "Oh, I want to own 1,000 properties, 100 properties, 1,000,000 properties." Like, okay, do you really want to own 1,000,000 properties? or do you want the financial freedom that comes from owning the right amount of properties to get you to that goal? Very rarely, myself included, I'm not necessarily passionate about houses. I don't love houses. I love the real estate as a vehicle, as an asset to allow me to be financially free and time free to enjoy my life. So it's less how can I just buy more properties for the sake of it, as opposed to how can I maximize my returns and scale my portfolio quickly and efficiently to actually achieve the financial freedom that I want while also having time freedom. If you can get more returns with less properties, you're in a much better position. For me, for example, maximizing my rentals through the co-living or rent by the room model, you would need 100 single family homes to make the amount of income that I do on 10 co-living properties. Well, of course, I'd much rather do that, but people focus on sometimes the wrong goal. And part of it is the people teaching them are maybe not necessarily educating the right way. For me, it's always reverse engineer the goal. It's not how many houses do I own? How much am I generating? How do I get there efficiently and enjoy my life? Because a big part of the purpose and profit is also peace, right? I want to enjoy a peaceful existence. Having 100 different tenants and 100 small little properties all over has not been my goal ever. I'd rather consolidate that through smaller multifamily or the rent by the room model. So that property was middle of 2024. We closed on it. That's in the middle of my co-living investing journey. I started with my first property in 2023, going the rent by the room model. It was a short-term rental that we bought in Atlanta, Georgia. It actually wasn't that great of a short-term rental. On paper it looked fine, but then it wasn't getting the returns that we were anticipating. So what we did is I learned a new management strategy in that market that was working really well, which was rent by the room, leveraging the pad split platform. I We added an additional bedroom, converted the living room to an additional bedroom. It started making more profits than it did before, and we got a solid return on investment. However, what I learned through that property wasn't this property. It actually wasn't that phenomenal of a rent by the room property either. But because we were able to pivot, we were able to increase the income, and I was able to pivot once again. And because we bought it creatively, I was able to offload it to someone else who wanted to buy it because it made more sense for their investment goals. Didn't make sense for the returns that I was looking for anymore. But what that property did was the proof of concept for me. I
Yep.
can get a property, rent it by the room, fill it fairly quickly, and have it maintained fairly easily. Lots of tenants that are staying for 6, 12 plus months. Okay, cool. This strategy is solid, but this wasn't the right property for it. So once again, the same way I reverse engineered, I want this much income coming in. How do I get there efficiently? Okay, well, I want these profits for a property. What type of properties, what type of locations make the most sense? So the strategy was good. The property wasn't the right one. So then it's identifying larger properties in different locations that then perform better. That's what that property was for me. Proof of concept, it worked. I just needed different properties to implement the same strategy, and I have not stopped. I have not looked back at all since I did our first co-living deal in 2023. We've just kind of nonstop ramped up, adding multiple properties a month, every month pretty much for the last two-ish years. And the cool part, I mean, we'll talk about it later, but I do all this using none of my own personal funds, which is pretty awesome.
Absolutely. It's funny because as you were describing that Atlanta property, it really hit home with me personally because it made me think about a question that comes up a lot of times when people ask me about midterm rentals. And, I always say like there's no two situations that are the same. You got thrown into the deep end of the pool. You needed to make that property work and you pivoted. And I think you learned obviously a lot from that. But when people, come to me and ask about midterm rentals, would this be a good midterm rental? There's always different situations. If you're coming from being an Airbnb and you've already got the furniture in there, then it's a different situation. And it's also different if it's a property that you have already owned and for whatever reason it's not working out, it's not cash flowing enough as a long-term rental. So a lot of it does depend on, like what's your perspective on that property, because there are definitely properties that I've seen where I wouldn't necessarily recommend on the front end that someone acquire it with the intent of it being a midterm rental. But, if they wanted to dig their heels in and make it work, kind of like what happened with you with that Atlanta property, if you're willing to invest the time and effort, then almost any property can work as a midterm rental. You've just got to, kind of get to know all of those different things. So It's interesting because that really did resonate as you were explaining that. Now you were talking a little bit about raising capital, so I wanted to pivot to that a bit too. And full disclosure for anyone watching, that I am an investor in some of Michael's properties. So he has done a few different offerings on the fractional platform. Which, if you don't know about fractional, look it up. It's amazing. I myself have gotten quite involved, and I'm doing a variety of investments through my directed IRA through the fractional platform. One of those is with Michael's most recent offering, along with partners. Tell a little more about that and how that's worked out for you so far.
Yeah, so fractional, just for anyone watching, it allows people to raise capital through smaller increments per person, or if you're a lender, to invest in smaller increments to someone's deal. So, for example, previously, if I had to, on average, for a co living rent by their own property, between the cost to acquire the property, to renovate it, furnish it, to have reserves set aside, on average, it's around $100,000 to do so. And that's leveraging creative financing. We're not even putting a 25% down payment, which the majority are, right? So we're already at a massive advantage to not have to raise as much money to buy our deals. But that money tended to come through a single individual. We would partner up, they would get their percentage returns, and then that's all them. They put in the money, they get those returns as an owner with us or as a lender through that one individual. Well, fractional has allowed people like Regan and other investors to put in as little as $5,000 to then take ownership of those deals with you or be a lender in those deals at a fractional amount. So if we were going to split 50-50 with one individual, well, now 10, 20, 50 people can split that 50% pie and be part of that deal, learn throughout the process, get solid returns, and then leverage that for their own investing journey. And then for me, it's allowed me to help a lot more people on their investing journey by bringing more people in the fold. For me, at this point, between all that I'm doing, like the little brand that I'm building and all that kind of stuff, it's fairly easy for me to raise money for my deals through individuals because I don't mean to toot my own horn, but I do it pretty well. I get great deals. I present them very well, very logically, very straightforward, and then we partner on them. And people are like, yes, please. I have more than enough people willing to invest in my deals as individuals. But one of my biggest goals is to help over 10,000 investors on their path to financial freedom. So part of that is through educating people. Part of that is through allowing more people into my investments. Fractional allows me to do so because sometimes one of the biggest roadblocks for someone is overcome by partnering on a deal because now they're actually an owner, they're actually part of the process, not just thinking about it. And if they
Mhm.
had to put in 25, 50, $100,000 to get into a deal, that might be too much for them to do so. But allowing 10, 20, 30, 40 people at a smaller increment to do so, we're helping a lot of those guys overcome that hurdle and then take the next step, whether it's the first time they're trying to get into co-living, first time in general investing in a real estate deal, wherever they're at in their journey, it helps propel them forward. And it's great for me personally because I get to bring more people into the fold. And it honestly makes it easier to raise money in the sense that there's a lot of people that have 5, 10, $20,000 that want to invest, a lot less that have 50 or $50,000 or more that they can invest in one individual deal. So that's, why I was able to raise between two different large capital raising deals, over $1.2 million in less than 3 days for each of the capital raises. These are not just like one deal, like these are multiple properties in a portfolio, all being operated as co living. The first capital raise for three properties, 7 total units, 25 high end rentals in Georgia, in Atlanta, and Savannah, Georgia. We raised $800,000 in 72 hours. Then we did something similar for a portfolio of properties in Texas. This was 4 properties, 30 total rooms, co-living rooms, and we raised $450,000 once again in 72 hours. That's not this magical number. Not all the money is always raised in 72 hours on the platform, but just to show you how quickly it can be done on the platform, but understanding that, depending on where you're at in your investing journey or cap raising journey, it might take longer, but the advantage is you have more people that might want to partner with you in lower increments than they would be willing to in a larger investment upfront.
Exactly going to what you said, I was really interested in that first one that you did in Georgia. And it was a you snooze, you lose. Like, I don't remember what I had going on. I'm like, oh, I'll come back to it. And boom, it was closed out. So, I look forward to maybe you'll have another one in that area. I love kind of just following along with some of these opportunities. And like I said, in my case, I just recently started investing through my directed IRA, and I really love using that as a means to, do something more active than just putting it with a Charles Schwab account or something. But just to, invest in deals and people I know and trust, and feel good about those opportunities, and also to have the opportunity to learn about specific exit strategies through that process. So it's really neat to follow along. And now it's interesting, the ones in Texas, which are the one that I invested in, those are primarily being transitioned from Airbnbs, correct?
So two of those are Airbnbs that are converting over into co-living, which is nice because then we already have the furniture, we already have a lot of the furnishing for the majority of the house. And because we're remodeling the first two, which are not, they're just traditional properties being converted into co-living, we're renovating those two and allowing the other two to make their income throughout summer. So we're staggering the renovation plan so that we're not trying to overload too much renovations, too many expenses, too many new rentals on the market at the exact same time. So it's
Hmm.
this kind of nice mix with that specific portfolio of deals. So two of them, and this is very common actually, similar
Hmm.
to the way that I got my start into co-living, converting a short-term rental, we'll say a failed short-term rental to co-living, whether it's failed or not, you can, if it makes sense to invest the additional capital to get higher returns,
Hmm.
you should highly consider that investment decision. Well, a lot of the properties I'm buying creatively to then convert into rent by the room, they are failed short-term rentals. People who
Hmm.
came in too late, or people who don't know what they're doing, or they're too mom and pop trying to compete
Hmm.
with like the high level hospitality operators on the passive or on the Airbnb platform or the short-term rental marketplace.
Hmm.
We're taking those properties and turning them into phenomenal co-living rentals. We're taking a failed short-term rental that was taking housing away from local residents by jacking up prices and getting vacation tenants in there, taking those properties over, allowing them to be rent by the room so then the people that live and work and serve in those communities can now afford to enjoy a really nice place there where they otherwise were priced out because their housing was being taken away for other strategies. It's pretty awesome overall. It's what I really love about co-living as well.
Sure thing. That's well, and another thing that you layered in on these Texas properties is, in some cases, being close to military bases, particularly some that might have a shortage of housing, which I know is different from one base to another. I happen to have one property that is close to a base that I haven't yet had the opportunity to house anyone long term that's on TDY or anything like that, but we do host a lot of families. That particular property happens to be a hybrid property that sometimes I have short term, sometimes I have midterm. Whenever I do have it midterm, we tend to have a lot of families there for naval graduations, which is pretty cool to be able to do that. But talk a little bit more about how your history as a veteran has factored into what you're doing into your Mount Everest.
Yeah, so I mean, I'll be like the first ever property I ever bought was leveraging my VA loan while I was active duty in
Mm.
Fairbanks, Alaska. So my first ever investment was while I was stationed at Fort Wainwright in Alaska. It was a multi-unit. My wife and I lived in the lower unit, and we rented out the upper unit to an Army officer. And
Oh,
then
wow.
what we did the next year was another similar house hack style with a 4 unit property. And we really quickly learned there are like you said, a lot of people coming to visit. They're coming to visit, they're soldiers or whatever. A lot of new soldiers coming into a new base and they need some temporary housing and there's not a lot available on base. And so it's like providing that furnished rental option to them. But also a lot of soldiers would love, like when you're active duty, you get the ability, if you're living off base, you get to keep what is known as your basic allowance for housing or your BAH. It's just like tax-free income that you can use for housing. If you live on base, they take all of that. But all of your housing and your utilities are covered. But if you live off base, whatever you save, if they're going to give you $2,000 and your rent is $1,000, you keep that $1,000 additional as tax-free income. Well, a lot of people when they're on base, maybe they have a house, maybe they don't and they're sharing a place. But when you're off base, if you're saving income and you're splitting a house with someone, you get to save that excess income. And a lot of people really want that option. And we've noticed that with a lot of our near military bases. It's like, how can I save on housing so that I can use my money for things I care about more? And this is not unique to military healthcare professionals, to, I mean, really anyone. I saw this insane research done by Harvard in 2024 that 50% of people are spending, like, that make less than $75,000 are spending at least 30% of their income, if not more, on housing and utilities. So at least a third of their income, half of those people are spending 50% or more of their income on housing. So they go to work all day, so then they can afford to pay rent that they only spend a few hours in, to then go to work and then come home and then go to work to come home. Well, a lot of people are saying, screw that. We are
Yeah.
not here to just work and just pay for housing for the sake of it. They'd rather, they're going to have less privacy. Obviously, they have their own room, but they're sharing a house, sharing common spaces, but they'd rather save on income or on their housing substantially to then go and enjoy their life, go eat out more, go to concerts, go to events, go travel, invest your income, do those kinds of things rather than just overpay for housing. And it's really cool whether you're military or not. It's a very common thing. And unfortunately, the stats show that the majority of people, because the median household income is around $75,000, so at least half the country, as families, individuals even less, are spending so much of their money on housing. Well, either we can just say, oh, that's inevitable, that's what's going to happen, and they just keep paying a bunch of money, or they're unable to get housing and they go into homelessness, or it's like, what is the alternative? Well, this is a solution. This is a solution that allows people that are living, working, and serving in their community to actually be able to afford affordable housing and then enjoy the fruits of their labor, not just pay it all towards housing. It's this really unique, awesome experience as a landlord, as an investor with this strategy, because it's not very common with other strategies. I can never say that with my short-term rentals. I have some cool short-term rentals, but I don't feel like great about it necessarily. Like, I understand the impact, but I feel very happy with our co-living, and our tenants are so grateful for it. It's just this awesome place, military or not, but military is very common, where this is very common. A, they're both open to shared housing, and B, they really want to save their housing costs because it's tax free. So they definitely want to save that and just enjoy their money.
It's interesting that you made that connection for them, travel medical professionals, construction professionals too. We actually house a lot of construction crews and individuals in our midterm rentals, and the same thing holds true across all of those. Like you said, they're getting an allowance, a per diem, and if they're getting 3,000 a month and they can spend 2,000 a month or whatever that is, and then be able to really utilize that additional amount, why not do that? And you're right, you have to make different decisions to be able to do that. And it does usually mean some sort of a room by room or a shared space, because of course, you're not going to get a luxurious 2 bedroom for that small allowance. But if you're willing to, look at it differently and then be able to open up those other possibilities for how you utilize that additional allowance that you have, it's a really great opportunity all
And that's
around.
a great point. Like, the people that have like a fixed housing allowance, so then they
Mhm.
know that whatever they save is their money to save. So either they can spend all of it or spend less of it. Whatever they spend, they keep the difference. But it's also those that are working a lot, like a lot, or like we have a lot of airline staff that are working a lot. They just want a good, safe place to come home to in the evening when they are in town. That is another very common demographic. Or those that are young working professionals that are, they're like, dude, I don't care about my house necessarily. I want a good place to sleep and have a good room and a place to hang out, but I'm not overly concerned. I'm spending most of my time out. I want to enjoy proximity to the city that I'm living in. I don't want to live 45 minutes away in a studio because that's what I can afford. Rather save and live closer, enjoy where I'm living, eat out more, spend more time with friends out, or even get more delivery, whatever they want to do. They're like, I have a better use of money than just spending it all on housing. And that's why so many young people, even with jobs, are living with family, because it's like they literally cannot afford to live out on their own, independently, in their own studio, even, or 1 bedroom, or they'd have to give up so much of their income. It's like, well, what's the freaking point? I'd rather live with my parents than have my own place because of how much money I'm spending. But even better if they, at least have their own space away from parents as well. So a lot of people think, when it's the co-living model, they think of boarding houses and like, not like just a tremendous amount of people flooding a room. It's like, no, we have one person per room. Yes, that the larger house is shared between multiple individuals, but people have their own privacy, their own space. They have comfort in these homes, these mini communities, this co-living, community living housing model, and they understand the trade-offs, right? I think people think too binary sometimes. It's like, well, why would someone ever do that? Well, there's trade-offs to everything. You spend more money, you live more independently, you spend less money that you can use for other things, and this is the trade-off for it. Everyone has a different goal, and a lot of the people that you mentioned and that I mentioned, this is the trade-off they're willing to make because they understand they'd rather use their money for much better things than just overpay on housing.
Well, I think, a common theme in the Sub 2 community and the Owners Club community is different ways that people are helping tackle the affordable housing crisis. And what you're doing is, without question, contributing to that. So it's really amazing to see just that ecosystem of kind of how it all works together and, who the people are that are being served by these affordable housing solutions.
And
So
I love that
let's
that you said, sorry, just to clarify that who are being served by this, because really, like I said, what is the alternative? Unaffordability is getting worse. Inflation is still high. Like, even if it's gotten a little bit better, prices are still up. That just means it's not growing at the same rate. Housing prices are tremendously high. Interest rates are tremendously high. It's like rents don't necessarily ever decrease in value unless that's in like a mini bubble, like certain markets have gone down a bit. But the reality of it is it's already bad. It's only going to get worse because expenses for everything go up where income barely increases. So then what's the alternative? They get priced out of housing entirely, live on the streets. We had I saw a post recently about a medical professional, traveling nurse asking to rent out someone's driveway to park their car to sleep there. It's like,
Oh my
is that what we
gosh.
want? Or the alternative, do we want government to try to do it? As a military and then government employee, I don't want government to do it. That's going to cost more. It's going to take longer, and the product is not going to be what we want. And or do you want venture capitalists, huge corporations with billions of dollars to be the ones to do it? No, it's up to people like us, mom and pop investors, to be able to solve or help solve this problem. We also get phenomenal returns. Don't get me wrong. I get more cash flow. I get bigger, better properties that generate better ownership benefits like appreciation, debt pay down, tax benefits. But we also get to help solve this problem through people like us, not huge venture capitalists, not the government, or just say, hey, sorry. I mean, this is the reality of it. Good luck, guys. Figure it out for yourselves. Like it's this unique place that we're in where we get to solve a problem. We're better uniquely qualified to do so, and we get awesome returns as investors.
It goes to that saying that we hear, do good and do well. So I think it really does, take a village, right? Like it takes our community. And I think that our community is, gradually getting more and more educated about what this really means and how big the problem is. And the fact that, it's really something that people need to have their eyes on the future of this as a strategy for, what they're doing with their investments. Because if you think about, like, you've got the entry, and if you're starting off, with creative finance, just like you were describing in the fractional investments that you offered, if you're starting off with that kind of an entry and then you take the right exit and you're doing good at the same time, that's just a win-win-win. I mean, you really can't beat that.
Absolutely. Better cash flow, better ownership benefits that's building your wealth over the long term. So your cash flow is making you free. Ownership benefits are making you wealthy. 5, 10, 20 years, it takes time for that to happen for the wealth. But then you're also doing something awesome. It's so much better when you actually care about what you're doing. I said in the very beginning, I don't actually care about houses. That's true. I don't feel this feeling about houses or I want a bunch of houses for the sake of it. It's not monopoly to me, right? There's no
Right.
necessarily like I want, but I do care about providing high quality housing to my tenants. I really care about all the staff and all the people that we hire and we work with, all this employment opportunities, my team, helping other people do the same on their path to financial freedom. I care about all of that. The house itself is whatever. It's all the people that we impact is what makes this investing so much more enjoyable for me.
Makes sense. And so a minute ago, where I was kind of starting to transition, and then we came back, was to talk a little bit about what you're doing from an education perspective, because truthfully, you're kind of doing that as far as I see from three different levels, if not more. You've got your free community where you offer some more foundational type learning that's free to the public that everyone has available. And tell me if I've got that wrong, but certainly correct
No,
that.
that's right.
But then also you have the education that's being provided to people who invest in your fractional opportunities as being a part of that specific opportunity. And then you also have your paid community. So tell me a little bit about the differentiators between those.
Yeah, absolutely. So it actually all started, like I said, I've always been someone to learn, implement, teach. the problem is at a certain point as I was growing and scaling, and I'm a very much a helper. I was helping and helping and helping. I was getting very overwhelmed with the amount of time I was putting out to help people. And I'll be transparent. Sometimes it was frustrating when I would dedicate an hour or two to helping someone. They learn, they take your time, they ask a bunch of questions, they never take action. That is a very frustrating thing as someone who loves to help. Helping is not just information, it's implementation. What is the result they're going to get? I don't feel like I've helped if they don't get a different result, but I can't control their actions. So what I had to do is
True.
learn a more scalable way to help people. So I created a free community on the school platform called Wealth Through Real Estate. I provide free tools, free trainings, things that people charge thousands of dollars for. I just give it away for free. This is for those people who were where I was at 7 years ago when I was starting to learn how to invest, 5 years ago, right before I bought my first property. And it's just like a lot of the things I wish I understood: deal analysis and the tools to do so. What are the different investing strategies? What makes sense for you depending on where you're at in your investing? But then, and that's been able to allow me to help more people, way more people, and provide them a more dedicated training series, really ramp them up as opposed to just a call. And just have a much larger impact. On that same vein, I've been putting out more content on YouTube and Instagram. And I always say, I'll never have the biggest following. I won't have a bunch of views. And that's okay because I'm not doing it for the views. I'm doing it to provide people value. So my things are longer, more boring, more tactical, more step by step. And that's okay because the right people get value from that. I'm not here to hit on some trendy topic or dance in front of you guys. Like I don't need views for that. So there's that piece of it. And then I have super investors. It's my paid mastermind community. This is not for everyone. It's for those that are investors already, who have already been part of some form of education, have already started to invest in themselves, and now are needing the skills, tools, resources, really the fast track, the blueprint to be able to advance towards financial freedom much more quickly. So this is where I was at 3 years ago. Before I started implementing at a high level, creatively financedly acquiring deals, like so acquiring deals creatively financed. Before I started raising money to buy my own deals, I bought over $20 million of real estate. I've had to put in around $5 million to acquire that portfolio, including acquisitions, renovations, furnishings, all that stuff. But the reality of it is, I didn't have $5 million. I had to learn to raise capital to be able to build that portfolio by providing great investment opportunities to others, right? It's like that's the big thing. You have to provide them a great investment opportunity and build trust with them. And super investor is a big part of that. And that's what's allowed me to scale. Or capital raising is a big part of super investors. And the co-living model. Like I said, I'd rather have 10 houses that hit my financial goals than 100 Section 8 single family homes in Missouri, right? I'd rather have 10 great properties in the Southeast than do a bunch of small properties in a smaller market. That's not really what I've ever want to build as a portfolio. And that's what super investors is for. Really fast tracking the success for those that want to buy and hold real estate using little to none of their money to actually achieve financial freedom. You get access to all of my stuff. That's something you're interested in, just reach out to me. We'll hop on a call. I may or may not allow, like, I have to talk to everyone and make sure you're the right fit for the community. So it's not this whole operation, it's not this whole process to do so. We gotta talk and make sure you're the right fit. And the last piece of that is the investors that partner with us on deals, whether you're a private money lender, but primarily private money partners who are co-owning assets with us. We try to share as much as we can about the acquisition, the numbers, the photos, the renovations, the all these different things so they can learn how that property itself like was acquired and renovated and how it's being managed and like what's working, and here's the listings, and the big part is here's a lot of photos and videos. Use this for your own content. Use this to help you on your own investing journey as well. Not just like, oh, this is my stuff, this is my content. Very much believe in abundance so that people can leverage that for their own investing journey. The reality of that is that it's a great way to get your foot in the door, great way to own these assets, co-own these assets and leverage it for yourself, but it's not the full education. It just takes a lot of time. That's really what super investors is for. It's a great starting place for people who want to invest in assets, get some of the tools and resources as well as the ownership together so they can leverage that for their portfolio. But then it's really the super investors that helps tie it all together and take it to the next level, just because that thing is a very step by step, high level, like it's a whole education series. So there's just too much to explain to every single capital partner unless we did a whole training series with them. So that's kind of the various ways.
Understood.
But
Yeah.
free free education through my wealth through real estate community and social media. super investors for more advanced investors looking to scale, intermediate to advanced investors looking to scale, and then let's own assets together and help you hit the ground running as opposed to trying to figure it out all on your own.
We have definitely covered a lot here. The last thing I do want to touch on is your buy box and how people can bring you deals. I know that you leverage wholesalers extensively. I do the same myself personally, but I know that sometimes you work with folks within the community, and even thinking of the fractional deal that I'm involved in. So, talk a little bit more about how people can work with you as far as bringing you deals.
Yeah, great. So like there's three main acquisition strategies that I have. Like we find our own deals directly. This is less and less common now because there's just no reason for it. Joint venturing, so working with people. So whether someone has deals that they want to partner on and they need like maybe they have the deal but they need help with the capital or they need help with the experience or operations. That's one way. So if you have some great investment opportunities, or bird dogging, if you are someone who knows what my buy box is, you know I'm looking for 3 bedroom, 2 bath or larger properties, at least 1,750 square feet or larger properties in some of my core markets. I have free education for you in Wealth Through Real Estate on how to like the best way to find these deals, the best way to submit them, my specific buy box, the markets I'm buying in, all the ways that we can collaborate together. Um, Also, I just buy deals from wholesalers directly. So it's if you're a wholesaler who has deals, send them my way. So it's every single link that I have is in my Instagram bio. So at Michael MNAT, Michael M Nat in my Instagram bio. It's in the free tools and buy box link. So from there you can submit deals to me directly to buy, opportunities for us to JV, or you can bird dog deals to me, and then also get access to the free Wealth the real estate community, where it's not just, hey, here's my buy box. It's let me walk you through it. Let me explain what all these different things mean. How do you
Cool.
submit a deal? Because once again, it's one of those things where I was doing over and over and over again. Well, cool. Let me put it in this free community to help people who are in that position that would rather partner rather than try to do all of it themselves. And then for me, it allows me to save my time and provide a better value instead of trying to do PowerPoint and whole thing, multi-hour thing with individuals over and over again. It's like, here, guys, I've already created the shortcut, the fast track. Here it all is, beautifully laid out for you, step by step when you have time. And the asynchronous is nice too, because we work with people all over the country, all different time zones. Some people are working, some people are not. It's hard to coordinate everything in real time. Take advantage of this as you have time available because everyone's got different life obligations.
Wow. Well, this has really been amazing. Thank you so much for making time. I know you've got a lot of balls in the air, and I hope that being able to share with a new audience the things you're doing and different ways to work with you will be a good opportunity. So, look forward to seeing you in a few days in Monterey, and talk to you soon.
See you soon. Bye, Regan. Thank you for having me on. Appreciate you.